floor of the CME Group, this is Danny Riley with today's MrTopStep update. This morning the markets were firm coming in and the S&P traded up to the 1299 level, and then right at 8:55 Central Time, the Michigan sentiment number came out better than expected and the S&P just sold off 11 handles. Now, you know, there's a lot of questions surrounding the markets over the last couple of weeks about the seasonalities that occur going into the end of January into February. And there's a lot of negative statistics that float around in that area. Witter and Lester has given us some statistics that say that from 1950 to current, the average loss for the S&P during February is 0.59%. But when you put in the pre-election year, that stat turns around to a positive. Now, you know what, the big thing that people are, there's so much fracas going on the trading floor over here in the S&Ps about the S&P getting up toward the 1300 level, and that going into this seasonally weak period that a lot of people want to take profits, or market timers are calling for a high in the S&P. Last week, Tom DeMark came out and he said that he was looking for a correction of 11%. That day, the S&P sold off 16 handles, and since that day, the S&P has rallied 40 handles back. What MrTopStep is looking at is whether or not there has been any real structural change in the S&P that should dictate some type of bigger sell-off. The way the dust sees it, and the way a lot of these locals on the floor see it, is that the S&P is continuing to back and fill, and that every time it does, it goes up and it makes a new high. And the last note here, the Pitbull came out yesterday on the phone saying that if you take the 666 low and you times it times 2, you come out with 1333. The math may not be perfect, but that's a level that he's kind of looking at on the upside. We'll be back with another MrTopStep update on Monday.